right, good morning, guys. Johnny and Mr. Forex Fire. We're coming up to 8 a.m. on June the 5th, and it's a Monday. And as I move forward, there's two things I'm wanting to test. One is a method, which is something I've done a while back, over a year ago. Okay, I started a method over a year ago called a 1 minute scalp between a certain time window. And just recently, you'll have heard about the Silver Bullet. Now, what I was doing over a year ago, and what this Silver Bullet is, it is so close to being the same. It's unbelievable. Other than I had a couple of other little bits and pieces that I was doing with regards to the order blocks rather than the FVG. And the same principle, they're exactly the same. So ICT came out and he's called something that the Silver Bullet. Now, I don't normally follow ICT. I've always done my own sort of concept with things. But when I heard about the Silver Bullet and I watched part of it, I looked back on some of the old stuff that I did over a year ago, where I did around about a month to 2 months of forward testing on it. And back then it was very, very profitable. And you can see those videos inside of the 1 minute scalp in the advanced area. Okay, so I want to sort of test something with regards to the Silver Bullet. And I want to do it with one trade on the London Open, one trade on the US. Okay, or try to do it on the US Open, because I also want to do something with the scalp killer with the US 30, so it might be a little bit hard to do the NY Open on this as well. However, this morning I'm going to be doing it all based upon the Euro USD. So what I'm doing is I'm doing, like I said previous on my 1 minute scalp, I'm going to highlight obviously these highs and lows, and then I'm going to drop into the 1 minute. Just going to come into this. And I can see there's a trade instantly straight away. So if I just do a trade buy limit, what I want to do is 10 pip and 10 pip, risk 1% on the trade. Pick that buy limit now. Now the preference on this, what it's about, we have an indication and it's within the window, and the indications came up straight away. I wasn't expecting this, to be fair. I was hoping it was going to be coming within the stretch of the gray. The gray window is the time zone or the kill zone to be entering on this. I'm taking just under the 50% of this. Hopefully we'll get a retracement into it. And the preference is 1%. And we're going to go for 10 pips drawdown and SL for 10 pips gain. And we only looking for, as I see it, we're only looking for the one trade. Okay, we're not looking for multiple trades. We're just looking for an in and you're out. Okay, so let's just highlight. You can see we're on a 10K account. I'm on a demo. I just go to my FX book. Go to my FX book, and you see on here, I've created some new portfolios. So the original scalp killer one, we were doing this and basing it upon 100 trades and looking to get the profit factor. We got the 100 trades and the profit factor was 181. Okay. So I went from that and showing you this was profitable over the 100 trades, and I upped the risk and I went to the 100% scalp killer. We did this over 100 trades. Profit factor was a little bit less, but we risked a bit more and we ended that in 20.68%. Now I want to do this new one, which you can see here, it's fresh 10K. And you can see on here, it's fresh 10K. This is now entered. And I'm just wanting to forward test this on the Silver Bullet. And then I've got one for the scalp killer, US, the NY Open US 30. So we're just going to watch price as we move through this. Let's have a look now. This might throw me a minute. This is just a bit of trial and error at the minute, to be fair. I've had a confirmation candle, but instantly again, I've had a one on the opposite side on the sell. So this might strike me out until I get used to what the system is. But we can see there's been a fair value gap left here. And we've had an engulfing candle coming out of here. So there's a fair value gap there. So what I'm going to do, I'm going to pause the video. I'm going to let structure move a bit. And then I'll be back in a short while. But you know the preference on what I'm doing. I've got the high and the low point of the swings. This looks as if it might just come and stop me out, to be fair. Actually moving against us at the minute. Again, we've got a liquidity area here. And this looks as if it's going to be the engulfing move. So we may just have to cut our losses on this and re-enter on this. So if I just do this, trade, sell limit. So I'm going to counter trend what I'm doing at the moment. We'll just see if we'll get a retracement out of here into the imbalance and then come down. This might just leave the station and come down and hit us out on this minus. I would rather see an entry position come in first, to be fair. Just watch this live. Was there any news on the US? I'll put the news into here. Euro. Best if I just do this FX Street. Yeah, there's Euro news this morning. It's medium as well. So this might have a factor in something being pushed. I'll pause the video. I'll be back in a short while, though, guys. Just bear with me. Like I say, this is the first official video of trying this system and using it with regards to this indication as well. As time goes on and I do more of these videos, I will let you know more about this indicator once I start seeing some sort of what's the word, consistency with it. But it's got me interested at the moment. It's got me interested. I'll be back in a short while. All right, guys, so we're back and I'm watching price as it is. We can see that this indicator it's giving us confirmation. Okay, so generally my colors are blue and black. Blue for bullish, black for bearish. Okay, when a green candle comes in, it means it's an engulfing. It's bullish engulfing. When the red comes in, it's a bearish engulfing. Okay, so as you can see on here, we've had bearish engulfing. On here, we've had bullish engulfing. Now, all that means is the candle has engulfed price action to its left. Okay, so you can see on here, these candles here, this has engulfed the entire candle and so give us a confirmation candle. Now, when we get a confirmation candle, in this instance, when it's been bullish, okay, it gives us an area of a fair value gap beneath it, okay? And it's the same as when we have a bearish, okay? Whenever there's bearish within the swing, it's going to give us the fair value gap within the swing, okay? However, I entered a little bit early on this morning, I do believe, and I've took the first part of the account down by 1%. It threw me with regards to this instant bullish engulfing candle on the open. I should have waited because, again, we've got the time window. This is going to be our time window to get in on the first trade. I do believe it's from around about 8 o'clock in the morning to around about 10 o'clock. I'll have to verify that, though. But, again, between them 2 hours, I did a 1-minute scalp around about a year ago. Okay, I did the 1-minute scalp on this sort of concept over a year ago before the silver bullet. even been sort of thought of or came out from ICT. So the concepts were very, very similar. Now, I based it upon obviously the trend and the swing previous to just on the open. So I think I got in a little bit early on this one, lost the first trade, which is 1%. The plan, okay, the plan itself, just bear with me. The plan itself, guys, is that we only supposed to take one trade, but because it's my first one today, I thought I would, because I've lost that first one on that so early, I wanted to continue with the video, and this is the only other trade I'll take on it. Here on in, when I do these videos and try and put the concept together on the build your plan part, I just want to take the one trade within the time frame window. Okay, so I've got it all set. The preference is I've got the fair value gap. The fair value gap was around about here because you see this wick here to this wick. This was the fair value gap based upon when the momentum shift was coming down, swept the liquidity end. This was a fair value gap. This was, and this was here, but it's been met in here, okay? This is still a fair value gap to the high side. However, the fair value gap, you see this wick here to that wick there, there's a tiny fair value gap. I entered here and it come deeper into the swing of this high to this low, okay? I'm still going to anticipate that we will come lower, and all I'm looking for is a 10 pip move to the downside with a 10 pip SL, and I'm only looking to risk 1% each one. So again, we've already done it a little bit too early, straight away on the open. The confirmation came in on that, so I really should have sat on my hands. That's my mistake. Again, just to run this out, we've got highs, lows, swinging back in towards the imbalance here, and now we're starting to get more or less a little bit of a, not so much a double bottom. The A, B, C maneuver, I would really want to see, for price to go in my favor, I would really want to see that area broke and that area broke. If I see liquidity take us down through this, I've got no doubt that we should be able to attain this. However, on the higher side, we still have imbalance here, and we've got a form of liquidity here. If we come up into this, take this, and we touch into that, all's not lost, but no man's land is certainly, if we come into this area, we will lose the trade because it's going to search and destroy this liquidity here. So this all depends on the movement of this. We've got the momentum down. The imbalances were left behind on this high-low structure. We come back into just over 50% retracement. And then we've come back down to try and go for a reason to drop here. Failed to do it. So we've got two areas of liquidity here. Now we're pushing back up to try and create. Because as you take liquidity, you've got to create liquidity. And when we look, just make this bigger. When we look at price action, okay, the price efficiency on here is spot on. There's no real liquidity points in here other than the top of this candle, the top of this candle, the top of this candle, the top of this candle. There's no fair value gaps and no price inefficiency. All that lies on here is the individual liquidity on the top of each candle, okay? So again, if this was going to move to the upside and want to search and destroy any of them, this is a draw on price here. It's a bigger target. And if it comes to mitigate into this, it's most certainly going to take that. And it would knock me down for 2% for the start of this forward test session. However, like I say, we're doing liquidities as we come down in here. I would love to see what's on this price leg to come down and take out these here. We'll just go on the fib retracement. Take a look. You can see on here, okay, we move this out. We've come to 618. It's bounced off that nicely. So normally you get a reaction off the 618 anyway. So I want to see that come down. I want to see it break this liquidity structure here. So what we've seen based upon the A, B, C, structure-wise, we've come back in from the swing high, the swing low. This is a 618 liquidity area. And as it's done that, and it's swept just above here, it's left an imbalance here, as you can see. This is a bullish fair value gap. So again, with that in mind, because we've created the high and broke this, because this is a swing still, because we've got a buying and selling either side. This liquidity has broken that swing. So again, we want to see the bearish come in and crash through the fair value gap. If we crash through this fair value gap, then we've got a draw on price to take two areas of the liquidity. Okay, some of this might just go over your head, but this is the sort of stuff I was doing around about a year ago when I did the 1 minute scalps, and it's what helped me sort of get my shit together and understand price action and the movement of price action a little bit more. So what I'll do, guys, I'm just gonna delete this. I'll delete this. I'll pause the video. I'll be back in a very short while. Hopefully we'll get the momentum shifting in our way, and we'll see. Let's move this on here. And we'll see, obviously, the continuation down. Structure-wise, this here, A, B, C. See these? Bang, bang, bang. So it's a high, lower, low, lower, high. Hasn't quite broke the lower, low. So this is what's given me where you can get a market shift structure and an MSS, which is a market shift structure shift. Okay, this is why we want to see liquidity broken here, because if it breaks here, it's then possibly going to go to this lower low here. But at the moment, the range wise, it's seeing high, low, 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 high. Still stuck within this range. Okay, now price is coming in and it's wanting to go for this. And like I say, if it comes in to attack this lower high and then comes up and takes the imbalance here, we then could see a change of character, because the high, the low, 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 high, not quite low, low, stuck within this structure here. If price comes up, bounces through that and takes that liquidity, it's more certainly going to take that. Then we could see a shift in momentum, which in turn would then become a change of character. Okay, we'll pause the video. We'll be back in a short while, and we'll keep an eye on price on this. Again, we are only looking for a 10 pip gain for a 10 pip loss. Okay, I'll be back in a short while, guys. There we go, guys. So it's not looking good for the first part of the session today. It's coming up to search into this imbalance area. So again, if this crashes through this, it's most certainly going to take us out on this. Okay, we'll save this imbalance holds. But again, I would rather these things happen early on in the stages of what I'm testing. And it is what it is. It just means I've then got to wait for the New York session to come in. And we'll go back to the drawing board and see if we can get something on the New York session. We can see how that the bearish engulfing fair value gap is now starting to be mitigated. And will it actually take it, or will it react from that? Let's just find out. Again, I think personally it's going to take it, simply because this has left a fair value gap here. So this is looking very bullish now. It all depends on this candle here. It's either going to take it on this candle, or we may get a reaction back from it. So I think it's going to take it on this candle, though. It's going to push there. It's wicked into it, so it's mitigated. Now, is that going to be a reaction point? Or will we see it just fully take it? We've got fair value gap here. We've got a little fair value gap here as well. And we've got a fair value gap here. So a draw on price, there's a lot of areas down here on the 1 minute that this could mitigate into, you know. So again, if I just try and highlight these areas, you've got your draw on price there, you've got one here, you've got one here, and you've got an ever so small one there. We've got a draw on pricing here now. There's plenty of it to target down here, because if it does come in to target these areas, we've then got these swing points here. So officially, this is the high, this is the lower low, this was the lower high. Once we break through this liquidity here, structure-wise, you go to the left again. So we're looking at this high to this low. We're within this structure range still. But even within this structure range, with it going bullish, we have left a draw on price on 3 or 4 areas. But again, we just need to see what's going to happen. It looks like it may just crash through everything. I think it's going to come up and take this out now. Let's just see. We'll see. There we go. And it's taking it. So I'm going to close that video off for today. Stop the share and just give you my thoughts. So it is what it is. 2% down, forward testing stuff. I'm going to stick with the plan. See where we go from here. And yeah, we expect teething problems at the start of the show, so to speak. Okay, so that's the end of this video. I'll come back on during the New York Open. See if we can get back in on a trade. Okay, guys, I shall see you all later. Let's just stick with this and we'll see how it goes. See you later.